Chapter 9, the Consumer Reporting Act and the Land Transfer Tax Act. In this chapter, we're going to identify situations where where the requirement of Customer Reporting Act apply. We'll explain the difference between the credit and personal information. We'll apply the requirements of the Consumer Reporting Act when obtaining and using on information on consumers, describe procedures for calculating provincial land transfer tax and municipal land transfer tax for Toronto, and outline key provisions regarding first-time buyer refund for a new and resale home that apply to both provincial and municipal land transfer taxes. So let's begin with the Consumer Reporting Act. The Consumer Reporting Act is a provincial statute designed to protect consumers to a specific rights: the right to revise incorrect information about a personal credit history, the right to know what has been reported, and the right to ensure that information used by agencies is being correctly collected, stored, and reported. To rephrase, the Consumer Reporting Act is a provincial statute designed to protect consumers through specific rights like the right to revise incorrect information about personal credit history, the right to know what has been reported, and the right to ensure that the information used by the agency is being correctly collected, stored, and reported. The Consumer Reporting Act also provides that the consumer must be given notice when the information concerning the extension of credit or the obtaining of personal information is involved. When the consumer so requests, the person must also inform consumer of the name and address of the consumer reporting agency being used. The act is written so that contracting out of its provision is not possible, and all salesperson and brokers should be aware of the requirements. Access and use of reports. The Act permits a consumer reporting agency to provide reports to the person who the agency has the right to believe intends to use information concerning the entering into an or renewal of a tenancy agreement in connection with a credit purchase or collection of a debt of a consumer, or from or for some other direct businesses need involving the consumer or intends to use the information for updating consumer report information being received. So, the Act permits a consumer reporting agency or the credit bureau to provide reports to the person who the agency has reasons to believe intends to use information concerning the entering into and the renewal of a tenancy agreement in connection with a credit purchase or collection of a debt of a consumer, or some other direct business need involving the consumer or intends to use information for updating consumer report information already received. Um, a consumer for the purpose of this act includes a person engaging in any transaction other than in the course of carrying on a business, trade, or a profession. The act provides a system whereby a consumer will always know whether credit was denied as a result of a bad consumer report. Specifically, the person making use of such information must give notice of this fact to the consumer. He or she must obtain must inform the consumer that within 60 days of receiving this notice, he or she can request the nature and the source of information where agency is not involved, or the address or name and address of the consumer reporting agency. Credit information: when a person proposes to extend the credit to a consumer, or a consumer reporting containing credit information only is being or may be referred to in connection with the transaction, the person shall give written notice to the consumer at the time of application for credit, or if the application is made orally, then orally at the time of the application. Credit information includes consumer details such as name, age, occupation, place of residence, previous place of employment, marital status, spouse name and age, dependent and particulars of education, qualification, place of employment, estimated income, paying habit, outstanding debt obligations, cost of living obligations, and assets. And the personal information includes the Act also addresses personal information involving details other than the credit information about the consumer: character, reputation, health, physical or personal characteristics, mode of living, or any other matter concerning the consumer. When a report concerning personal information is involved, advance reader notice must be given to the consumer. The name and address of the consumer representation agency must be supplied upon request. So to recap, a consumer for the purpose of the Act includes a person engaging in any transaction other than in the course of carrying on a business, trade, or occupation. The Act provides a system whereby a consumer will always know whether credit was denied as a result of a bad consumer report. Specifically, the person making use of such information must give notice of this fact to the consumer. He or she must inform the consumer within 60 days of receiving this notice. He or she can request the nature or source of information where the agency is not involved. He or she can inform the consumer, must he or she must inform the consumer within 60 days of receiving this notice. He or she can request the nature and the source of information of the agency where the agency is not involved, or the name of the consumer reporting agency. Requesting a report. The Act states that every person shall appear requested by a consumer in writing or personally inform the consumer whether or not a consumer report has been or is to be referred to in connection with a specific transaction or matter in which such person is engaged, and if so, provide the name and address of the consumer reporting agency supplying the report. Credit bureau. A credit bureau is a clearinghouse, often referred to as a credit investigating agency for all types of credit-related information. Essentially, companies involving in lending money provide the bureau with credit information and in return have access to files established for each consumer's credit reports are provided on request. The credit bureau receives information not only from the lenders but also from the public report record sources. Most companies use credit cards within Canada, such as financial institutions, oil companies, department stores, use a service. Selected banks input information, and major Canadian-based automobile financing companies are also part of the system. Credit bureau provides information that is usually updated on a 60-day basis. This varies depending on how the information is transmitted between the individual lenders and the bureau. Often the information is sent electronically, which has improved both the accuracy and the timelines. Of course, the consumer has the ability not only to verify information being held on file, but also to dispute and alter the incorrect data. Credit bureau only compiles information related to credit. No data is collected relating to personal habit, affiliation, political or social connection. Further, not all credit information about an individual will be found on the record. The completeness of the data is limited to the number of lenders that participate as members with the bureau in any particular locale. The report on the individual may be limited, but still is a useful indicator of the positive and negative aspects of the personal credit history. Credit bureaus in Canada produce a report within using a common or standardized language to ensure reporting is consistent and that all credit grantors use the same terms to describe specific type of pay habits. Provincial and land transfer tax. Provincial land transfer tax is on the real property where the deed is registered, transferring ownership of the property from one party to another. The tax is used as a sliding scale uses a sliding scale of percentages based on the property value. Real property registration. A real estate practitioner most commonly encounter imposition of land transfer tax at the point of registration of real property. A purchaser, when entering into an agreement of purchase and sale, is obtaining an interest in land. A taxable event occurs pursuant to the Land Transfer Tax Act, where an interest in the land is conveyed. More specifically, the tax is payable based on three conditions. A registration is made under either the Registry Act or the Land Transfer Act. The document is being registered. Being registered is a conveyance, and the conveyance involves land. The term land is precisely defined. Disposition of unregistered interest. When practitioners more frequently While practitioners more frequently associate land transfer tax with land registration, a second dimension of land transfer taxation was introduced in 1989 consenting disposition. The LTTA in 1989 had imposed land transfer tax on the disposition of beneficial interest. The complexity of the system goes beyond the current text, but rather a general understanding of the process warranted. Essentially, amendment encompasses the disposition of unregistered interest in which no registration of document occurred that is cooperative of the use of trust. The latest definition addresses any sale, transfer, assignment, however affected, involving any part of the beneficial interest. As with the registration provisions, the disposition definition includes a range of possibilities. The designer of the amendment excludes situations that were not intended to fall within the legislative scope, that is transferred due to the death of the owner or securing of a mortgage. For the other disposition of a beneficial interest were identified as attracting a nil tax rate, for example, the transfer of to a spouse pursuant to a separation agreement, or a certain family transfers for natural love and affection. The matter of taxing beneficial interests has caused some confusion. In 2002, the Ministry of Finance issued a notice pointing out specific rights to occupy that constitute the beneficial interest, including the life lease, life tenure, equity lease, and life tenancy. The Ministry views such right as not being leasehold but rather freehold interests and subject to Land Transfer Tax Act. One exclusion noteworthy is a building built on a leased land in which the unexpired term at the end of the disposition is less than 50 years, including a renewal or extension. Exemption for life lease. In 2004, the government clarified a matter concerning life lease by regulating an exemption concerning land transfer tax involving certain life lease developments. A life lease development is defined as a land with a self-contained unit, organized as what is commonly known as a life lease project, where the right to occupy a unit solely for the lifetime of the individual or for the term of at least 20 years. Under the regulation, if the owner of the life lease development is a non-profit organization or a registered charity, each individual who acquired the life lease interest in order to use the unit or as a primary principal residence or the principal residence of the individual parents or spouse, they exempt from the land tax upon acquisition of the life lease interest. This regulation was passed retroactively and will entitle anyone who entered the life lease arrangement under the above circumstance after July 18, 1989, but before 2003 to apply for a refund of a land transfer tax paid. So to recap, the disposition of unregistered interest was included as an amendment. So essentially, the amendment encompasses the disposition of unregistered interest in which no registration documents occur, like the cooperative or the user trust. So the legislative definition addresses any sale, transfer, or assignment, however affected, involving any part of the beneficial interest. As with the registration provisions, disposition definition includes a range of possibilities. The designer of the amendment excluded situations that are not intended to fall within the legislative scope, that is transferred due to death of the owner or securing of a mortgage. Further, other dispositions for a beneficial interest were identified that are attracting a nil rate, transfer to the spouse pursuant to the separation agreement, or certain family transfer for natural love or transfer and affection. The matter of taxation beneficial has caused one confusion. Value of the consideration. So there is exemption for the life lease. Value of the consideration. The value of the consideration is also a matter of legislative interpretation. Most land conveyances involving real estate practitioners are based on cash or its equivalent in the arm's length transaction. Accordingly, the tax is computed based on the sale price. However, LTTA must address more complex situations, for example, the disposition of property for natural love and affection, that also includes the assumption of debt. Special rules also apply in the case of a mortgage foreclosure. For example, determinations must be made when the value is not readily apparent, the market value associated with a long term lease or the contribution of land to the capital structure of the corporation in exchange for share. Tax calculation. Effective to 2017, the land transfer tax in Ontario is 0.5% for first 55,000, 1% for 55,000 to 50k, 1.5 for 250k to 400k, and 2% on the balance about 400k, where the land contains one or more two family residences. Where the land contains one or more two family residences, the 2.5 rate applies to consideration over 2 million. First time buyer refund. Effective 1996, the first time purchases of newly constructed homes become eligible for a refund of land transfer taxes. The deadline was subsequently extended to for successive years. The person qualifying includes individuals 18 years of age or older who are Canadian citizens or permanent residents of Canada, or within 18 months following the registration become Canadian citizens or permanent residents who have not owned any interest in a home anywhere in the world and whose spouse has not owned any interest in the home anywhere in the world while he or she was a spouse of the individual. An interest in a home can be obtained in any method, including a purchase, gift, or an inheritance. Home means an eligible home as defined in the Land Transfer Tax Act. In order to qualify for a refund, a first-time buyer must be purchasing a newly constructed home or an interest therein. A newly constructed home is the one which first-time buyer is entitled to a warranty under Section 13 of the new Home Ontario Home Warranty Act, which is sold to the first-time purchaser by a vendor as defined under this Act. The newly constructed home must be occupied by the owner as a principal residence within 9 months of the of the conveyance. This refund is based on the amount of interest the individual owns in the newly constructed home. If the individual owns 100% of the new home and paid 400k, the amount of land transfer tax payable is 4475. The buyer will receive a refund based on the minimum maximum of 4,000. So if the buyer owns 50% interest, the amount will be $2,000. The refund is not available if the first time purchaser has received a new home ownership savings plan based refund of land transfer tax under Section 9 of the Land Transfer Tax and vice versa. If the individual qualifies for this refund as well as OHOSP based refund, the first time buyer must decide which one to claim. He or she cannot claim both, can claim either but not both. If the sale is registered using the electronic land transfer system, the refund can be claimed immediately by selecting the appropriate statement within the Land Transfer Tax section. If the registration is completed by paper at the Land Registry Office, the applicant can receive the same day refund by filing the appropriate affidavit along with the land transfer tax, along with the transfer deed and land transfer tax affidavit. If the applicant does not apply for the refund at the time of registration, he or she can apply for a refund within 18 months following registration by contacting the Ministry of Finance. First time home buyer refund on resale homes. Eligible first time home buyer on resale home may also claim a refund up to $4,000. Procedures and eligible requirements parallel those under the program originally constructed for established for newly constructed homes. Eligible home includes a detached home, semi-detached townhomes, shares in a cooperative corporation, a mobile home, meeting certain standards, condominium unit, residential dwelling that is a duplex, triplex, or fourplex, a partial ownership, interested as a tenanted common, and a manufactured home meeting certain standards. Municipal land transfer tax. The municipal land transfer tax is charged on properties purchased in the city of Toronto. This tax involves the disposition of all beneficial interests effective for closing of the dates on or after 2008. The MLTT is charged in addition to the provisional and non tax. As with the provisional and non tax, MLTT is typically collected at the time of registration. The tax rates are for 4.5 up to 5k to 50k, 50k to 400k is 1.5, 400k to 2 million is 2%, and about 2 million is about 2.5%. For property containing at least one or not and not more than two single residences, and for all the properties. I think with this we're done with chapter 9. To recap, our Consumer Reporting Act provides that a consumer must be given notice when information regarding concerning credit or personal information is involved. Credit information must be differentiated from personal information. A credit bureau receives information from the lenders and other public sources and provides credit reports upon request. Credit bureaus only compile information related to the credit, provincial and transfer tax, as well as municipal and transfer tax in Toronto is assessed on real property when property's ownership is transferred. Seek legal advice on matters concerning provincial and transfer tax and disposition of unregistered interests and exemptions concerning life leases. Provisional tax, land transfer tax, and transfer tax in Ontario is normally based on the value of the consideration. Expertise is required as special rules apply concerning things at disposition of property for natural love and affection. First time home buyers can qualify for a refund relating to both provincial land transfer tax and the municipal land transfer tax for new or and resale homes. With this, we're done with chapter 9. Thanks.